Hey everybody, welcome back to the channel. Today we have a special guest, Phil, from the Rumble channel, the BitterDraught. He graduated, he has a master's in the Austrian School of Economics. These are the reasons we would like to listen to people like this that have an actual education in the background of the Austrian School of Economics, not to be confused with the Keynesian approach, which a lot of people obviously do. They think this is going to work, but we know it's not going to. How you doing, Phil?
I'm doing great, Chris. Thanks for having me on.
Absolutely. So we're looking at a crash like we've never seen before, and I talk to people every day, and they're struggling trying to figure out what to do. I talked to a guy about commercial real estate today, buying a house, another fellow about buying a house. And, we're trying to figure out what to do with our fiat. Where do we put this fiat, and why would we put it there? Where's the price of silver going? I want to cover all that. So wherever you'd like to start.
Sure. Let me introduce myself a minute. So I am actually a normal guy. I did graduate from George Mason University, which does focus on the Austrian School of Economics. And I learned we learned all the things about the gold standard and sound money. If you want to think of what I learned, it was basically Ron Paul the school. But I graduated, and then I said, well, all these things are very, very nice, but that is not the world I live in. I live in a world with the dollar. And nobody seems, we're not going to move it off of that anytime soon. This was, 20 years ago. So I lived my totally normal life, got a job as a programmer, moved on. Anyway, the mysterious virus of unknown origin and the events that followed happened in 2020. And I said, all the alarm bells in my head just went ring-a-ling-a-ling-a-ling-a-ling-a-ling. You cannot lock everyone in their house and print a bunch of paper and then that's just going to go back to normal. I said, that's not what's going to happen. And so I instinctually knew something was horribly, horribly wrong. So I started diving in, and I started listening to other people on YouTube. I want to see what other people were talking about it. Following Rafi Farber, who I do podcasts with now, everybody, Market Sniper, Nobody Special Finance, anybody that wanted to talk about economics, I wanted to hear about what they had to say, or finance. And so I also started reading. I said, let me go back to the foundational theoretical texts. And if I can briefly recommend a couple books for your readers, and these are by a man named Murray Rothbard. And I just want to say we are not flying blind into this storm. This has been written about extensively. Now, this is a simple book. It's called Economic Depressions by Murray Rothbard. And then this is also very simple. It's a quick read. What Has Government Done to Our Money? Also by Murray Rothbard. And if you really, really have the attention span of the Buddha, you may dig into Man, Economy, and State by Murray Rothbard. And I'm going to try and get this into our conversation in about our 15, 30 minutes. There's a lot in there. I'll try and condense it as best I can. But I'm going to real sip of water here too.
Yeah, go ahead. This is good. This is right on time. We're seeing the price of gold fall $100 in one day.
Yes, the reason actually I reached out to you, I emailed you after a video you did with George Gammon. You did about George Gammon, where George Gammon went to Argentina.
I did it about what he was talking about.
Yes,
and not Argentina, right? Yeah,
right.
Argentina, and what was happening to the dollar, and you were saying I wasn't wrong. You were encouraging me to keep encouraging people to get into precious metals. But I want to just point out that I have to be careful. A lot of people get too heavy into an asset, and they don't have the means or the hands to hang on to it when things get bad.
I would never advise anyone to zero out their accounts. Ever.
Yeah,
calmly and rationally. It's like if there's a fire in a building, you calmly and rationally head towards the exit. If you try and stampede out, you're going to get knocked over and walked on. So you had a video with George Gammon, or about George Gammon. So George Gammon made a video where he went to Argentina and he tried to spend gold and silver. He said there's a hyperinflation going on in Argentina. They should be ready to do gold and silver. Now, he did have some luck with silver. He did not have any luck with gold. And I could see you and Stacy had a lot of trepidation in your voice. You're like, are we doing the right thing? Are we pushing people in the right direction? You were a little nervous, I could tell. So I reached out to you just personally. I said, you're absolutely doing the right thing. There's a theoretical foundation, and there's a reason why this didn't quite work in Argentina when George Gammon did it, and it will work in the actual in game. Because Argentina's in its own little mini in game. It's not in the big global blow up.
Well, it didn't change the way I invest in precious metals. It's the same. Like I said, the point I want to push is don't get too heavy.
Yes, I would absolutely advise that.
And I know George Gammon personally, and I know what he does is he takes a certain portion of his net worth and he puts it into gold. He doesn't sell his gold. It's insurance. That's the way it should be. A lot of people are trying to use it to get rich. And there's a lot of things that can happen between now and you getting rich. Okay. Yes. And that's what I want to, I don't want anybody to get hurt. That's why I make videos about not buying at the top. We've been knocking it out of the park. But that was the reason I just don't want anybody to get too heavy into any asset. That's all.
Absolutely. So George Gammon, in my opinion, there are two definitions of money out there. One is that money is an abstract point system, and that's the one George Gammon is using. The Austrian school believes that is wrong, that money is a commodity. Money is a physical commodity. And let me demonstrate this now so I can explain it to you. So I say, Chris, I like your hat a lot, and I want to buy it from you, and I'm going to offer you silver ounce. This is not a silver dollar. It's just a private round of 100% pure silver. Now, you would consider that. You might not take it. You might say, no, I like the hat. I'm not trading it for you. But you would consider it. You would say you have a rough idea of what this will trade for elsewhere. And it's shiny and pretty, and you might like it for your own stacks. Might want to give it to your kids or your the kids in the neighborhood. So you would consider it. Now I want you also to pretend this is a 20. I'm searching my wallet. I only have $1, but if you pretend this is 20, I'm going to say, Chris, I want to trade you $20 for that hat. Once again, you would consider it. You'd say, okay, he's offering me some money. I like the hat more than it. Maybe I'm going to say no, but it's in the realm of possibility. So the third thing I'm going to offer you, I'm going to say, all right, Chris, I can see you like green paper with numbers written on it. So I'm going to offer you this green paper with the number 20 written on it. You would not consider taking this, but you consider taking this green paper with the 20 on it. So why does this green paper not work, but this green paper does? And the standard definition people give is they would say, well, this is a valuable thing. I'm offering a valuable thing to you, and we're going to do a barter. This is money, and this is nonsense. This is me, this is not. That's actually not quite correct. This is money. This is credit.
Debt.
This is credit, and this is in fact nothing. So they are right on that point. So the question is, if this is credit, what is it credit for? Right? Because in 1971, Nixon closed the gold window. Am I able to share screens here, by the way?
Yes.
Okay. I'm gonna try and share a screen in a minute. So when Nixon closed the gold window, the common wisdom is that the gold was kind of left the system. So we were trading in notes for gold. So until 1971, we were trading notes for gold, and really until 1964, you could get silver certificates. So you could trade in notes for silver, and they were it was basically $1 was silver. A $1 silver certificate was the same thing, same purchasing power as a $1 Federal Reserve note. It
was pegged.
Yeah, they were pegged, and that is a problem. They probably should free float, but that's beyond the scope of this video. So until 1971. The Federal Reserve note was pegged at 1/35 of an ounce of gold. So let's say a cup of coffee was 10 cents. So if you do the math, it's about 1/700th of an ounce of gold. A cup of coffee was about 1/700th of an ounce of gold. Then Nixon closes the gold window, and the next day you go and a cup of coffee is maybe 11 cents. I don't know, whatever happened the day after. The question is 11 cents of what, right? What happened? How could it be 1/700th of an ounce of gold? Then the next day it's what? It's what is it being measured in? And the answer is they never took the gold off the balance sheet. And I'm going to share my screen now. Hold on. Let me get the window up real quick. So Fed balance sheet, I think it's H41. Let's try that. Fed balance sheet, if I can find H41, June 6th. There we go. All right. Let me share my screen here. Present. Share screen. Boom. Share. All right. Do you see the screen?
Yep.
Okay. So we're going to go down to assets. So this is all the assets they have on their balance sheet. Where's the memorandum items, maturity? I think it's table 4 or 5. There we go. Table 5. So this is all the assets they have on their balance sheet. They have gold right there from the Treasury. This is June 24th, 2024. They still have. Now, this gold is 8,300 tons valued at $42 an ounce. They re-upped it from 35 to 42, and then they just closed the window and stopped the convertibility. But they kept it on the balance sheet of the Fed. And they also have, this is coin. I have looked into this as best I can. As best I can figure out, this is actually gold owned directly by the Fed itself. So these two things, I think, you add up to about 8,300 tons of gold, as I said. Everything else on here is promises for dollars themselves. So this is IMF rehypothecated dollars, and all of these are Treasury bills, mortgage-backed securities, all the garbage that they've been throwing on their balance sheet to puff it up. So I'm going to stop sharing it back to my face here. Maybe I should keep sharing. We'll figure it out. So all that other stuff is just promises for dollars. That is their own unit of liability, right? So that the Fed prints the dollars. So you can't it is not possible to owe yourself money. So if I write let's say I have $20 in one pocket and I write a note for myself for $20 in the other pocket, that is a meaningless thing. It means absolutely nothing. For the system to work, it has to get out. Other people have to hold the debt. So at the end of the day, the only thing that's of any value at all on the Fed's balance sheet is the gold there. Now, to revalue, I've done videos on this. To revalue, if they were to clear all that up, get rid of, let's say there's a debt failure for some reason and no one wants any more debt, hypothetically. If they were to clear all that out and just revalue the gold to the dollars, it would be something on the order of $60,000, $70,000 per ounce of gold. So what that means is, let me rephrase that actually. I'm going to rephrase that. So they have $2.3 trillion printed right now. Physical printed dollars are in the system. It's about 2.3 trillion. If they want to revalue just to that, it's about $8,000. So what that means is they would say, okay, we're sorry, we printed too many notes, we have to revalue. And countries do this all the time. Argentina just did a revalue, but they revalue to the dollar. The dollar has nothing to revalue to except gold. So they're going to say, sorry, we printed so many notes, we're going to have to revalue. From now on, instead of $42 an ounce, it'll take 8,467, I think, dollars to get 1 ounce of gold. So what does that do to you, normal people in the economy? That means when you go to Burger King and you buy, three Whopper meals and with drinks and maybe a milkshake, that used to cost $42. That will now cost $8,647. And that will happen overnight. That's what a revalue is. When you hear like, Brazil revalued or Argentina revalued or Lebanon revalued, and there's panic in the streets and people are dumping their currencies and stuff. That is the mechanism that happened. They just revalue to whatever their assets are on the back, the real assets, not the garbage. They get rid of the garbage and they take whatever's real and revalue to that. Does that make sense so far?
Oh yeah, I'm following you.
So that'll happen. That will happen if they revalue. It will be pretty much overnight. Things will be revalued in the new mechanism of the dollar. Now that is just the paper money. So that would if they did just that, you're talking about every bank in America failing at the same time, because that's not bank credit. That's just money. That's just paper notes. None of it's money. That's just paper notes. To save the banks, you're talking about M2, which is about another 18 trillion. So now you're revaluing to, as I remember, it's about $60,000, $70,000. So again, you go to Burger King and 3 Whopper meals and a drink and a milkshake costs $70,000. As you can imagine, that won't last very long. People holding the physical currency are not going to be able to process, even millionaires. You're going to be out of, a millionaire will be completely wiped out in a day or two. Just going to the
what does that do to the price of oil?
Oh, everything will be. Multiply it. Whatever you multiply it by that in the dollar terms. Yeah, you're talking really bad. It's going to be.
Yeah, we're talking. This is sure enough Thunderdome talk. This is bad news.
Okay.
This is we're talking war. Other countries, the whole world, and it's a little different. We're using a world reserve currency as that's what we use. That's what we use on a daily basis, and so does the whole world. So to peg it different, to say, okay, let's reprice the gold overnight. I'm not saying it won't happen. We live in a Thunderdome. Anything can happen. I'm saying it's hard for me to wrap my mind around, because there's so many other things. What about the bond market? And
that would absolutely collapse. No, the problem is, okay, so the problem is when you come right down to it, to boil it down to its very essence, we have 8,300 tons. We owe 40 million tons of gold. There is not enough gold in the solar system, and that's just America's debt. So China owes another 35 million tons of gold. There is not enough gold in the solar system to service this. So I know a lot of people are worried China's collecting gold. China is in the exact same boat. The Chinese government's in the same boat. They have notes for millions and millions of tons of gold. The best they can do is, what do they have now? 3, 4, 5,000 tons. Even if they have, I've heard high as 20,000 tons, which is 3 times what we have in the Federal Reserve. Even if they have it, you're talking Thunderdome again in China. It's not going to be the digital yuan. I know you've talked to people who are worried about the CBDCs and the tech dystopia. So there's two dystopias I hear everyone talking about. One is the tech dystopia where there's cameras everywhere and we're forced to use the CBDCs, and we get a ration of cricket powder, and don't you dare go over that ration of cricket powder.
It's like an updated version of 1984.
Yeah, right. And the other worry is Thunderdome. And I'm here to tell you, it's not going to be.
That's not really a worry. That's a guarantee. CBDCs are.
CBDCs are not going to work. I'll get into that.
No, I'm not going to say they're not. I didn't say they were going to work.
Okay.
They are coming.
They might try, but they're physically not going to work. They're impossible. The Thunderdome is going to happen, but I'm with some caveats, and I'm going to make my next video on this. I don't think it's going to be as bad as everyone is worried it's going to be, because
why do you say CBDCs will won't happen?
So the question is, the way this works right now, and actually I'm going to share my screen again, if I may, because I have to explain how the Ponzi. This is, and I should have explained this from the beginning. The way the dollar system works right now, it is quite literally a Ponzi. It's
the definition of a Ponzi scheme.
It is the definition. There is no difference between the Federal Reserve and Bernie Madoff.
I get it, but
okay,
we're living through the Ponzi scheme right now.
Right. So when
they're
Ponzi
able to manipulate gold, they're able to do their tricks and keep the price suppressed, because it just so happens they're the world reserve currency and they can sell a derivative of gold and spoof the market. They can run it down for the time being. Am I wrong?
You are for the time being, that is correct. Yes. When the Ponzi blows, what you are suggesting for the CBDC. So imagine if Bernie Madoff's Ponzi blows, and then Bernie Madoff puts on a Mario mustache and says, "Oh, that was my cousin Bernie Madoff. I'm Shmerny Schmadoff. Would you? I have this new scheme. It looks a lot like the other scheme, but trust me, this one's much better.
People are going to run to it.
No one's gonna take it.
People are going to run to it. It's U.S. dollar. I disagree. I think people are so recency biased. In the beginning, people are going to adopt whatever says U.S. dollar on it.
Well, the U.S. dollar will be dead. It will be the scenario I'm talking about. You'll need $70,000 US to buy, a Big Mac, a couple of Big Mac meals.
Yeah, you're talking about Weimar Germany.
Yes,
full of money to buy milk.
We are heading in that direction. Yes, and then
we're borrowing $100,000 a second.
Yes,
roundabout.
Yes, and the
debt won't live. I'm just trying to devil's advocate. I want to try to kind of try to make sense of all of it for everybody.
So this is a debt-based Ponzi, and the way Ponzi's work is they must grow exponentially until they blow. They cannot stop. You cannot taper a Ponzi. It must grow exponentially. And let me share my screen because I'm going to demonstrate how it works. So I gotta open up a Google Drive real quick because I need an Excel spreadsheet. So let me go to my email here, go to Drive, open up an untitled spreadsheet, close. Oh, here we go. Yes. Got it. I am not sharing the screen right now, correct? Yes.
Not yet.
Okay. All right, sharing my screen again.
You can just leave it up, and I'll take it on and on.
Okay, that's fine. Spreadsheet share. All right, here we go. Okay, so we're going to have Phil. We're going to have Chris. Oops, I need some room here. Chris, and we're going to have the Bank of United States, Bank of US, whatever bank. It's just a private bank, fill it in for whatever you like. Okay, so the first scheme, there's actually two schemes going on at the same time. So the first scheme, actually, let me stop sharing because I want to explain this part first. The first scheme is with the money itself. So you have the gold in Fort Knox and you have the dollars above the gold, right? That's the first scheme right there, and it's unredeemable. So the question is, because you cannot redeem these for gold. Why are these worth anything at all, right? So for example, if you had a Chipotle burrito coupon and you went to Chipotle and you said, I would like to redeem this coupon for a Chipotle burrito. Chipotle looks at it and says, I'm sorry, this coupon's expired. You have worthless paper. You have completely worthless paper. You do not have a redeemable certificate. So because the gold is not redeemable, we can't redeem it at the Federal Reserve or at the Treasury Department. People assume, okay, so this must have some magical power. There must be some fiat power that's generating this, that's giving this value. And the answer is actually it's debt. Almost all of us owe some form of debt. And we have to pay that debt with the legal tender. In fact, I can't even, if I owe you $20, I can't come to you with, a little thing of gold and say, let me, shave off a little grain of gold and pass that over to you. You'd say, no, you'd be like, Phil, what am I going to do with this? How do I even know this is real? Right. I want the legal tender. And that is an issue. That's why paper currency was developed, is because it's easier to keep real gold locked up in a vault and then issue notes off the gold. The trouble is the people in the vault like to write notes for gold they don't actually have.
Well, that's what's going on in Argentina.
Correct.
People want cash. That's the manipulation that we have to look forward to. They're going to do whatever it takes to keep control, to maintain control. They're going to do whatever it is, and that means if it's anything like Argentina, they're going to stop velocity of money. That's why they're pulling themselves out of inflation. I talked to a guy today, and he's like, "Yeah, this is getting better. Inflation, yeah, because they can only get $40 of cash out a day. They don't care about silver, gold, or Bitcoin. They would like to buy some bread or something to eat. Or the government made cash valuable by making it
shortage.
Yeah. And
So
that's what I think is going to happen first. I don't think fiat currency is going to last forever. I'm on your side. I'm just saying.
Yeah, no, there will be some deflationary stuff. I might be able to get into that. Let's see. We'll see how long this runs. All right. Now I can share. Now that I've explained the first part, let me explain how the debt works. So the debt, this is the true meat of the Ponzi. So let's ignore the paper currency for 1 second, and let's focus on bank credit. So I want to borrow a loan. So I'm going to say, you know what? I'm going to move this over here. It's over one. I'm going to say fill assets and liabilities. Chris, and you have your own assets and liabilities right here. And the Bank of US also has its assets and liabilities.
Hey, and this is a good lesson for everybody. You
Yes.
need to do this. You need to have an asset and liability sheet.
Absolutely. So, and everyone has their own personal assets and liabilities. Okay, so I go to the bank. I want to borrow $100. So I go to the Bank of the United States, the Bank of US, and I say, hey, Bank of US, I would like to borrow $100. And they say, okay, we will credit you. Now, they don't hand me paper. We're gonna ignore paper for right now. We're just going to deal with bank credit. So the Bank of US makes a note in their account. I have account at the Bank of US, and they're going to charge me. They're also going to charge me 10% interest, by the way, just to keep it simple. So they're going to credit me $100, but I owe 10% interest on this loan that I took out. So I have a liability of $110. The Bank of the US has on their asset side $110. And they have a liability of $100. Oops. So they have lent me out $100, but they are marking this as paid back already. They say on their balance sheet of their books, they have put $110, assuming I'm going to pay it back. Now, you're going to notice something. Imagine a world with no paper money. If there's no paper money, and if this is the only loan in the universe. So let's imagine this is the only loan in the universe and there's no paper money. I have no way to pay this loan back, right? There's $100 in assets, but I owe $110. So I would have to default. I would have to say, I'm sorry, Bank of US, I cannot pay this loan back. So then what happens? They mark this off as zero, and they have a deflationary curve. They go out of business because they said, oh, you couldn't pay me back. That's zero, and we lost the liabilities, so they go out of business. To pay it back, hold on. Let's say you at the same time do the same thing. You go to Bank of US and you go and you borrow $100. You take $110 liability. Do the exact same thing. So they do the exact same thing on their side. They say we have $110 profit and we have $100 liability. So now I go and I say, Chris, I want to buy your hat. So I take $20 and I transfer it from my account to your account. So I go, okay, I now have sent you $10, or $20. So I go, boom, boom. I go down to $80 in my account, and you go up to $120. You now go to the Bank of the US and you say, you know what? Here is my assets. Here's my liabilities. I'm going to pay this loan off. Now, in bank credit, when you pay off a loan, that's like matter and antimatter meeting. They annihilate each other. So the Bank of the US says, okay, he has paid off the loan. We are marking this at zero. And he has paid off our liabilities as well. And you mark this off and you still have $10 in profit. Yeah, was it 10 or? Yeah, it was 10. It was 10. So it zeroes out. The loan is paid off. The loan leaves the world of existence. And those $100, so $100 left the system. It was annihilated of bank credit. But I now have a problem. Before, I had $100 and I owed a loan of $110. Now I have $80, but I owe $110. So I'm even more in the hole than I was before. I'm starting to drown in debt. And the only way to get more bank credit into the system is for your wife, Stacy, to take out a loan.
Yeah, loans. Yeah.
And so on and so on and so on. This is how the scam works. And by the way, if I default on this loan, if enough, let's say we start defaulting on the loans, the Bank of the U.S. goes bankrupt. They have to, if you default on a loan, this goes to zero. Right? That's how the banks collapse. So the banks only survive if the credit increases, and the credit must increase at an exponential rate, because every time somebody borrows money and uses it to buy something, there's more and more and more liabilities and less and less and less assets on, or I guess the same amount of assets, but the liabilities are outstripping the assets on the people's side. So what that looks like in the real world is that you and me and, you know, Tom, Dick, and Harry, everybody else their debts are accelerating, and the amount of money they're getting, the amount of wealth they're getting on the other side is decreasing. That's why it's accelerating. And right now we're reaching that point where it's just starting to go vertical, and just everyone that was even slightly irresponsible is now drowning in debt.
Well, this is why interest rates are so important.
Yes.
You know, this is how they control the velocity of money. Yes,
interest rates encourage people to get engaged in reckless debt. So when the money is nearly free, what do? You go buy the house of your dreams.
Well, I mean, even for businesses, you know,
also
expand to get bigger, you know, growing the economy, and this is how money's created. That is a great explanation of how money's created.
Yes,
that and the printing press.
That's how credit is created. Yes, not money. Right. The when you get down to it, this is money and this is credit.
Yeah, well, I agree. Also credit. That's how fiat is created.
Right. So with that very simple example, you can see how this is going up. So what's going to happen when we hit the vertical? There is a point at which no more debt can be accrued. It's just a law of physical reality. You cannot take on debt forever. When that wall is hit, the choice is either a deflationary crash or a hyperinflation. When it's a hyperinflation, they just print the notes, you know, physical paper, and it litters the streets and no one bothers to pick it up. But all the debts just get paid off with worthless paper. And if it's a deflationary crash, everyone defaults. That's what happened to the Great Depression, was everyone just said, well, I don't have the money. I don't have it. So I'm defaulting. Shut down my business.
And when we raise interest rates, it really hurts other countries. You know, the dollar gets stronger. Their currency just really gets hammered. And for anybody that has the capability to short foreign currencies, that might be a good idea. You could start checking it out and looking at it. You can go to the Euro 6E1 and draw a line through. I'll show it to you if you want.
Please.
But it's really incredible. 6E1. This is the futures on the Euro. Share my screen with you real quick. I've probably got a lot of lipstick on my chart. Might have to clean it up.
Well,
but
you do in your personal life, none of my business.
Okay, let's get rid of this so I can make it huge. Let's go to the weekly, maybe the monthly. Let's go to the monthly. Reset chart. Now, you'll have to, that's the 200 that I need to get rid of as well. Right up here, and I'll highlight this for you. See that little doji candle right at the top?
Yes.
You can start right there. Pink. And I'll zoom back out.
Which currency is this?
This is the Euro.
The Euro versus dollar?
Yep.
Yeah.
Well, the Euro FX futures, it's compared against the dollar, I'm sorry.
Okay.
I want you to see the trend line that starts. Well, let's go to the top of that one. That was also 2008. It is just falling and fall. When we opened Pandora's box in 2008 right here, it crushed the Euro. It's and how's that going to get better?
It's not. This is going to be the first global hyperinflation. All the currencies are going to die at the same time.
Right. You can look at the yen.
Yes.
6J, same difference. There's 2008.
Yes.
Well, that's right. Maybe it's a little bit. It was a little bit behind, wasn't it? Was a little bit behind it. They've been having some real trouble. Japanese yen's been having some real trouble for a long time, since the 90s, for sure. But you can bank on foreign currencies getting hammered as this happens. So that it really makes me wonder, what are the other countries going to do? Are they going to keep loaning the United States money?
At some point, it has to stop. It must
doesn't
accelerate.
make sense.
I don't know what that limit is. I can't tell you that. I think it's soon. I mean, I would assume.
Well, we just had an awful bond auction.
Yes, I'm
China just
assuming
sold
that there's
2.3 billion at a loss.
Yes.
In bonds, and another country did 22 billion. So, there's no doubt that it's happening. Now, the repricing of gold, that is wild. It's a wild thought, because what comes along with that, I think, is going to be war and everything else you can imagine to try to protect the power. These people want the power, although I think they've kind of sold us out. They've sold us down the river a long time ago.
Sure.
So what's the thing to do? That's the point.
So the Rothbardian answer, I'm pretty much a student of Rothbard at this point. The Rothbardian answer is that when this blows, the U.S. governments and all the world governments are probably going to collapse by 95 to 99%. The war you are talking about is much more likely to be, maybe cartels with a pickup truck with a 50 cal mounted on the back than like World War I. So it's going to be much more chaotic, much more localized. Now the cartels are globalized too. So I'm not worried the Los Zetas international cartel is going to survive. It's going to break up into, neighborhood gangs. Now the question.
You mentioned the cartels. I got some. Go ahead. I want to finish on the cartels though.
Sure. The global people are thinking in the globalized system that is going to disintegrate. Now, it does not mean that we're all going to go full Thunderdome and we're going to be eating irradiated rats on a stick. There have been very, very, very nasty financial crashes in the past, and we have rebuilt after it. I mean, Weimar was a nasty. Now, what came after Weimar, I'm not recommending we head down that same road. However, they did have a functioning society after the hyperinflation. Same thing in Argentina. They still have a functioning society. They're not eating irradiated rats on a stick. So this will be a big one. It's going to be very, very, because with every other because of the Bretton Woods system, the way it works is that we have 8,300 tons of gold in Fort Knox, and we write notes on that. Every other currency has dollars on their asset side. So when the dollars on our side become worthless, the dollars on their side are also going to become worthless. So every single currency, the yen, the euro, the won, the ruble, everything is going to collapse, and they're going to have to. It's whatever's lying around, the gold and silver. They're probably not interested in the silver. The gold lying around is what they're going to repeg to. Now,
you don't think they're going to? That's the BRICS. That's the reason they're going towards BRICS.
I don't think it's going to work. It's the infrastructure. The infrastructure may be there, but at this period, it's going to be who has the gold makes the rules, and I don't think they're going to want to share the gold with each other. I think that's going to disintegrate, and it's going to be whoever.
When was the last audit on Fort Knox?
1950s. The gold may not be there, and there may be a small amount. Now, it's actually Rothbard is more optimistic. We don't need a central bank, and we don't need a treasury department to have gold. We had a fully functioning, flourishing, thriving civilization where people just had gold themselves, and it worked much better. So we can trade in gold, and we can trade in banknotes for gold. There can be private banknotes for gold, no problem. The Fed wants to stack all the gold in Fort Knox so they can write notes for money they don't have. So it's better. I don't have a problem with Fort Knox being empty. In fact, I hope it is. Now it will be.
That would be pretty bad.
It will be a deeper crash, but we will be free. We will return to the country of Jefferson and Washington. We will not have, you're
not going to have that without a civil war.
Well, hopefully not.
Yeah, that's what I'm talking about. It's there's a lot when you start going into this. I talked to a guy today and seeing it real black and white, kind of like we're talking, and there's so many facets. It's not such an easy thing. But what you can do is hedge.
Yes.
against it. You won't even miss it. And the odds of it, it's going to double. If you hedge with precious metals, it's just there. It's insurance. You know, you got insurance on your car, your
Absolutely.
health. It doesn't make any sense.
For the first 5,000 years of human history, everyone kept a little silver and a little gold, maybe a little copper if they were poor. Keep it under your mattress. You bury it in the backyard, whatever.
Right. So we're on 40 minutes, but man, I really enjoy talking to you. Is there other means of bartering? If we're really going to the bartering system, you believe that we're going to barter with precious metals?
Correct. Now, let me say this: if the period of the crash itself, so during the hyperinflation, when there's no credit at all, silver is the people's money. Silver has always been the people's money. Because the problem with gold is it's just way too high powered. If you try to buy gas with gold, you're gonna take this much gold to buy a house.
Right.
So you're bringing a house worth of gold to the gas station and shaving off a little flake to buy some gas. It's dangerous. It's inefficient. The guy's not going to want it because he has to collect it. He has to funnel it into a little vial that he's keeping all the gold shavings. This has historically bought half a tank or a tank of gas. It always will. So silver is the people's money. It's retail money. Gold is the money of governments, banks, businesses, and the wealthy, and silver is the people's money. Now, after credit gets reestablished, I don't think credit's going to die forever. Now, if we go full Thunderdome, if we go full absolute Thunderdome, government ceases to function, and you need to buy meat on a stick. You need to buy squirrel on a stick at a burning dumpster. The burning dumpster squirrel on a stick merchant. Then you will need to put silver in their hand. It's going to be silver. It's not going to be. You could offer a bottle of whiskey. You could offer other things, but silver is the money. Silver is the money. Go ahead.
Freedom seeds.
Yes.
That is the ultimate barter. I'm telling you.
Silver is the ultimate barter, but it's okay. Freedom seeds will probably work at a pinch.
As far as prices being way down.
Sure.
And when turmoil really shows up and people are marching down the street to take your stuff, you'll get all of your silver for a box of shells.
Absolutely.
There's a point. I saw this in South Africa when they started rioting and marching down the street, and they were selling freedom seeds for unbelievable prices. And I thought, you know what? That stuff's pretty cheap right now. I should probably buy a little bit. And I made several videos about it, and I hope people listen because it's cheap again, actually. And the moment there's any hint of war or people invading and uncertainty, that's one of the if we go Thunderdome, we got to go Thunderdome, man. I mean, you're talking about trading precious metals. That is pretty Thunderdome-ish, and I think freedom seeds are going to fit right in there.
So I think I'm actually very optimistic of the future. I think after the pain period, credit markets would quickly reestablished, and we're going to be using paper that is accurately backed by gold, whether it's private banknotes or the dollar somehow, the Federal Reserve somehow.
Why do you think it's going to be paper?
Oh, it could be digital. It could be digital notes, but it'll be backed by gold.
It'll be digital. Don't think that's not coming. We have a digital currency coming. There's no way around it.
I don't think the government's not going to have the power you think it does on the other end of this.
No, the people want it. Gen Z love Bitcoin. They love it's easy. I've been trading. I've been using it to pay for things. It's so you don't have to wait on a wire, nothing. It's blockchain.
Yeah, there may be. There's a gold back thing now. I think it's called Kinesis. Gold back crypto. It represents a certain amount of gold.
You got load for silver.
Yeah.
They're
offering that.
I don't see. That's the problem I have with sheckling coins around when you could just use an app on your phone that has you could send them 0.03% of an ounce and pay for your stuff.
Well, if you're not worried about Thunderdome, you don't need silver. If you're worried about Thunderdome, you need silver. If you're not worried about Thunderdome,
why is that?
Huh?
Why is that?
Well,
see, silver, I disagree with you a little bit because silver we have to have it. It goes in solar panels, phones. It's a commodity.
Sure. I'm talking about for trade. If you do not need to physical silver buying gas, like full Thunderdome, is when you were talking about a total and complete collapse of credit. If no credit is available,
I got you.
so then you're talking about like somebody saying, I don't want your points. I don't want these. I don't want your kinesis. I don't want your load. I want physical metal in my hand, or I'm not giving you this rodent on a stick. So if you want full Thunderdome, then you probably want some silver. If you're not worried about, and I'll let people make their own decision. If you're not worried about Thunderdome, but you just want to protect your wealth, then you probably want to focus on gold. And even gold, gold in the banked in the Cayman Islands would be fine if you're not worried about Thunderdome.
Yeah, and if you play the gold and silver ratio,
you can absolutely rock the gold and silver ratio too. I expect if we go full Thunderdome, then you're talking about 15-1. If you're talking about a nasty crash, then you're still looking at 30-1, 20, 30, 40-1. So right now, what is it, 87-1? So
yeah, I don't even know right now.
So if you want to play the trade, absolutely go for it.
Yeah, well, I mean, history kind of shows that's what happens. It's like a lagging, it's a little puppy on a leash that gets way behind. It runs way forward, and then it gets way behind. There's several ways to look at it. You mentioned buying a house with an ounce of gold. Yeah. There's the gold to housing ratio, which is catastrophically off. There's what I came up with, the laying chicken to silver ratio. On point, a laying chicken is $30.
There you go.
It is not. It is keeping up with. It is, and then you have the gold to silver ratio. So this has happened several times. People hold silver, and then when it catches up, they swap it over for gold. It just makes sense to me.
Absolutely makes sense to do that. Absolutely. I have no problem with that at all. We are running long, and I do have to get going. But it was
well. Thank you for coming on, Phil.
It was a real pleasure. If you have any questions, feel free to ask me.
Yeah, check out Phil at TheBitterDraught on Rumble, and he's a wealth of information when it comes to precious metals, the debt market. His Austrian School of Economics major. That's pretty cool. And if you have anything you want to share, shoot me an email and we'll get you back on the channel.
Well, I am just a student of Austrian economists. I mean, other people have written this. I am just deciphering this for the modern audience. I just want people to know that we are not sailing blind. Like this has been discussed for many, many, many years by very, very, very smart people, much smarter than me. So I'm just smart enough to read them and say, hey, this makes sense. And I think we can apply it to today.
Awesome. Well, everybody have an awesome, awesome day. We'll see you in the next one. Later.
Take care.